Thank you for joining us for today's webinar on NCPERS Affinity programs. Today's program is part of our Center for Online Learning. The purpose of the NCPERS Center for Online Learning is to provide remote continuing education to public pension trustees, staff, and other fiduciaries and stakeholders. In today's webinar, we will provide an overview of the Affinity programs that NCPERS offers to its members. Last year, NCPERS conducted extensive focus group interviews with nearly 20 public pensions of varying regional and demographic scope. We followed up with a survey of our entire fund membership and found that too many of our fund members were not aware of the Affinity services and products that NCPERS members have access to. In today's webinar, we are going to fulfill the request of those who surveyed who wanted to learn more about the NCPERS Affinity programs. Leading us in today's webinar is Don Heilman. Don is the Area Senior Vice President at Gallagher Benefit Services, our Affinity partner. He has over 25 years of experience in the benefit industry, with the majority of his work having been with large governmental entities. He has extensive experience in the design, financing, and implementation of comprehensive health and welfare benefits programs. As always, we encourage your questions and comments. However, in order to get through the entire presentation, we will hold all questions and comments till the end. Don, the presentation is yours.
Thank you, Hank. Hello, everyone. As Hank mentioned, Gallagher has partnered with NCPERS for many years in striving to develop and design programs for its membership that enhance both the employee experience as well as support and meet the needs of systems, trustees, administrators, and staff. So the purpose of today's session is really to cover at a high level 4 different programs that over the years have been designed and are available to all NCPERS members as part of their membership. 2 of them are really designed to provide additional value and benefits to actives and retired members. And we'll get into each one of those, which are becoming increasingly important as employers strive to attract and retain a quality workforce. And then 2 other programs that we'll cover are designed really to support and protect provisions relative to the retirement systems as well as their staff, particularly as it relates to the areas of fiduciary liabilities and also the evolving cyber environment. So with that, let us go ahead and jump into the first of the 4 programs that we want to talk about, which is probably the most long-standing program that's been in place, and that is the NCPERS Life Plan. The Life Plan that is in place has actually been in place for many years, actually established in 1969, has grown consistently through the years and now covers over 150,000 participants, whether they be employees, spouses, dependents, or retirees. The program certainly continues to provide valuable benefits. We have paid out over $11 million through the insurance company in death claims in 2015. That actually increased slightly based on very recent data we received for 2016. But at the same time, the program remains very well reserved, and in fact demonstrate how solid the program has been. The premiums for the program have never increased since the program's inception. The insurance carrier that underwrites the risk is Prudential, a very well established and very solid insurance carrier. As Hank mentioned, Gallagher Benefit Services manages the plan for NCPERS, and we then engage a third-party administrator, HealthSmart Benefit Solutions, to support the day-to-day administration and hopefully take much of the burden of the program away from plan sponsors that introduce it to their members. The program really was primarily designed to really complement very well what public pension plans strive to do for their members, and that is to provide increasing benefits over time as they accrue additional years of service. So recognizing that typically an individual is not going to have accrued significant benefits early in their career, the program is what we call a decreasing term life insurance program, which is very different than a typical term life insurance program. Typically what you will find is a plan, you buy a certain amount of coverage and the cost increases with age. In this program, the cost stays flat, and as you are younger in your career, you realize a very, very significant benefit for a very low premium, and then the premium remains flat over time, but as you age, the level of benefit decreases because we believe that then as they are accruing additional years of service, the pension is now replacing some of the life insurance that they might otherwise need to protect their survivors. So as you can see by the graphic, we start the plan at a very high level of coverage in the event of an incident, and as the yellow or gold line decreases over age, then in turn, the member is accruing additional years of service and additional valued pension benefits under their retirement system. So that's really the primary focus of this program, to supplement typical public sector retirement plans. Some of the other objectives of the plan beyond that, however, is certainly also to provide some ongoing financial protection as you age, including a very unique feature not typical in most insurance offerings, is to extend the coverage for retirees. It also includes as its core premium, or under its core premium, accidental death and dismemberment features and benefits. Also includes automatically coverage for spouse and/or, we're allowed by law, domestic partners, and even children of insured. So it's really a household level benefit provided under a packaged arrangement for a single premium. One of the real important features of this program is the fact that there are no medical underwriting requirements for membership. So the way this is typically offered is upon a plan sponsor's initial election to extend this program to its members, everyone has a one-time open enrollment with all coverage relative to their respective ages guaranteed with no medical underwriting. In addition, we will then work with that plan sponsor typically to also offer a new enrollment period that again is guarantee issue, or an open enrollment period typically annually thereafter. So it's not only a one-time offering, but a very unique feature again is that it's an annual open enrollment. The benefit, and we'll show you a table here in a minute of the various scales, but the benefit can be as much as $325,000 for an individual in the event of a death. Waiver premium is included, so if a person has coverage and ends up being disabled, the premium is waived. There is no employer contribution required, so it is a voluntary program. As I mentioned, dependent coverage is included. The accidental death and dismemberment is included. We've also designed some additional features relative to including an accelerated death benefit feature, as well as some enhanced AD&D features. One important note here, and a question we often realize or receive is this need to be offered instead of a traditional group term life insurance program, which often is accompanied by some supplemental term life insurance? And the answer is absolutely not. This certainly can be offered in addition to any other group coverage, and we believe is a very important contrast to some of that kind of coverage. So we certainly encourage that. And another important feature is the coverage really is 24/7 coverage. So whether the death is related to on the job or off the job, the benefit continues to remain payable. As I mentioned, there is one premium rate that is paid throughout time, regardless of age, rather than having your premium increase over time. There's also included in the benefit a will preparation opportunity that is included in the premium. As I mentioned before, domestic partners coverage is permitted where allowed, and we've really designed this to hopefully minimize the amount of plan sponsor involvement, other than just supporting some of the rollout of materials and the communications that go with it. This may be small for you, but certainly I think it gives you an idea. So this just gives you an idea of the nature of benefits by various age categories over time. So for example, if an individual were to die under age 25, there's a $225,000 death benefit. If that individual were to die because of an accidental death, there's an additional $100,000 paid out for a total of $325,000, and so forth. If you shift to the far right side of the table, you'll note then also the amount of coverage available automatically included in the coverage should a spouse have an event, or any legal child or any dependent child that's under the plan is also entitled to a death benefit as well. So a very comprehensive, all-inclusive array of benefits that are extended to the individual. In addition, again, a very unique feature here is the active coverage can be carried into retirement. Certainly, the annual enrollment process after initial enrollment is not extended to retirees, but if you do maintain the coverage while active and then subsequently retire, you are entitled to carry it into retirement, again, at the same $17 premium, so long as you continue to pay that premium. And again, we also have no maximum age limit, which again is a pretty unique feature that has been negotiated as part of the value that we bring through the NCPERS program. The cost of the program, as mentioned, is $17 per month. It includes all the coverage that we just discussed. And typically, what we will see is if an employer offers benefits as part of their ongoing programs, they can elect, and we encourage them to elect to do this through payroll deduction. Where appropriate or where agreed upon, the retiree benefits can actually continue to be paid through the retirement plan deduction, where that's established and structured as desired. Or we can facilitate an arrangement where the member who is electing the coverage can then do so on a direct pay basis, which is facilitated through our third-party administrators. So there can be the employer involvement, there can be the retirement plan involvement, one or both or neither, in order to facilitate the program. Just to give you an idea of some of the organizations that we have partnered with, many for several years that have rolled this out, gives you just an array. So a number of large multiple employer retirement systems on a statewide level have endorsed this for their employer participants. We've also worked with a number of different fire and police pension plans on a statewide or local basis. We've also worked with some employers directly, for an example, the City of Omaha, just to give you an array of the flexibility of the program, and also just the diversity of organizations that we have partnered with. So with that, we want to then move on to the second program that we've also designed, and this really has been a much more recent development and implementation based on a very rapidly arising need that we see in the marketplace, and that NCPERS certainly saw as well. And that's with regard to identity theft that we see emerging in the marketplace. So, one of the questions would be is, why would an employer or plan sponsor even think of offering some type of an identity theft protection? Well, we believe there's a number of reasons to do so, and first and foremost, because of the public sector, there's an elevated risk of identity theft in the public sector just because of the nature of public employment, the nature of public records acts, and also there have been several notable incidents recently that have put public employees on high alert. Something as obvious as the federal government when they were hacked a couple of years ago, for example, would be just one. But certainly with the information that's out there, the data would suggest that if you look at industry sectors, the governmental sector or public employment is probably the second most frequently hacked systems, secondary to the healthcare industry, just to give you an idea of the potential exposure and elevated risk that exists there. This just gives you an idea again of one of the recent examples that did occur. This goes back, as I mentioned, to the hack that occurred back in 2015. Obviously affecting literally millions of folks, and having the federal government react to that incident. Some additional recent facts that we have seen, just to again give you an idea of what we see as the emerging need for this program. According to the identity fraud study that was conducted in 2015 by Javelin Strategy and Research, it found that 1 in 6 Americans do not even realize they become a victim of identity theft until years after the crime has been committed. Interestingly, 48% or less than half actually detected a problem within 3 months, and many others did not see the response for several years into it. In fact, one of the interesting processes that we're seeing here is people are typically, oftentimes these criminals or these individuals are seeking to identify or obtain the identity theft information, and yet then don't act on it for several years to try to divorce themselves from the timeliness of some of the monitoring systems that maybe are in fact in place. Just an update, which is not on the screen, but rolling forward to 2016, the study conducted by the Javelin Strategy and Research Group found that there was an increase of 16% in incidents over 2015, and in terms of just the amount of financial impact through credit cards or other accounts being hacked and kind of victimized, there was over $16 billion stolen or otherwise obtained by the criminals as part of their identity theft. Some additional facts, which again I think just continues to hearken on kind of the world that we are now in. 86% of identity theft victims experience fraudulent use of an existing account. So where they are hacking, certainly it is very common that they are targeting financial means, i.e. credit cards or bank accounts. And what we also are seeing potentially is that taking the next step, which is even more important from an employer, a public employer, or a retirement standpoint, and that is seeking to find ways to potentially hack into defined contribution programs such as 457 programs that might be administered 403B plans and the like. And an estimated 36% of victims reported moderate or severe stress as a result of the incident. And interestingly, only 1.4% of the victims discovered they were victims through credit monitoring. Certainly credit monitoring is important, but what we are finding is there are a vast array of ways that people can get to your identity other than by things that are going to be caught or monitored through the credit monitoring. And that really is one of the things that brought this to the fore of looking for a quality identity theft monitoring firm that is looking at far greater avenues to identify potential threats of identity theft very early on, in addition to the traditional credit monitoring agencies. So through a very formal vetting process, a couple of years ago, we went through the primary vendors in this space and worked with the NCPERS to select the partner that we wanted to work with, a firm called Identity Guard. They were founded in 1996. One of the things that was intriguing to us is they have partnered with any number of financial institutions throughout the United States and Canada to provide similar kinds of services to them as institutional organizations. And obviously with the rigors of the scrutiny that they went through in order to contract and be retained by those institutions, that certainly gave us the highest level of confidence that they were very much at the leading edge of creating standards that had the highest security, complying with some of the most rigorous compliance standards in the industry. Through that process then, we worked through designing programs that we thought were much more tailored to public sector employment, negotiated some preferred pricing and preferred plan design provisions that are not available through them through the general retail environment, if you will. So we really feel, again, we've tried to customize this to make it of tremendous value to NCPERS members. And we've designed it, again, in a way that's easy and simple to administer, and in our opinion at least, in that there is really no annual enrollment per se. It can be set up to be administered and enrolled in any time. It can be done again through payroll deduction. It can be done through direct pay. In fact, we are seeing, not oftentimes, but while most times certainly it is being viewed as a voluntary benefit to employees, in some cases we are actually having conversations with employers about whether there might even be sufficient value to actually pay for a certain portion of the coverage or the benefit on behalf of an employee. That's certainly not unheard of given the elevated visibility that these threats are presenting. So again, there are 3 different options that we have designed that we feel meet differing people's needs based on their specific circumstances. Each one has more robust levels of protection, and these are the various benefits that are listed under each of those 3 options. I'm not going to go through all of them with you. One of the big things I think that's important to note here is, again, the nature of monitoring that is going on. So they are looking at far beyond what typically are going to be the standard credit monitoring alerts, but looking at many other sources of what even might be called subprime or black market resources and monitoring opportunities out there. The other piece that we believe is very unique to this program versus what we have observed in other products out on the market is the bullet that talks about the $1 million identity theft insurance. Most of the programs that you will hear will talk about $1 million of protection, but really what it is $1 million of protection to cover the expenses of going about recovering information, but it doesn't actually cover the monetary loss itself. Where this program actually includes any kind of dollars that you have maybe had taken from your checking accounts, your savings accounts, that somebody has taken from, let's say, cash equivalents in a retirement account, they actually will reimburse those stolen funds as well. Now, there are certain limitations to that, but certainly, nonetheless, it is a more expansive benefit than we are seeing in that regard versus many of their competitors. The costs for the program are basically structured in a manner that is similar or analogous to many medical programs where we've observed the fact that there may be different levels of protection that are of interest to an employee based on their specific household needs. So we've structured this in such a way that the premiums are actually based on the number of dependents that you enroll in the household. So there's one price for employee-only coverage. If an employee wishes to cover his or her spouse as well, then there's a higher level of coverage. And then you can also move on to a full family, which would include dependent children. On the children note, one of the interesting pieces, and again, one of the areas where we are seeing some very interesting activity in this regard is one of the areas of attack, or one of the areas of focus for many of these criminals is going out and finding the identities of children, in fact, very early on when maybe they are even infants. And then they will just maintain that identity for several years until that child reaches age 18. So literally buying protection or looking at threats that are several years out into the future. So again, there's a lot of value to this, not only today, but into the future, to try to help identify those threats and then cut them off before they become a real problem several years down the road. So again, some of the plan differentiators versus what we think are out there versus other products you might see at a retail level or through other vendors. We think it's much more comprehensive. Particularly, one of the things that we see is the timeliness of the alerts. We believe that the program, as set up, is looking at doing very close to real-time alerts. Many of the others may not give you an alert or maybe give you an update once a week or something much less frequently. This is designed to give you virtually real-time notification that there has been a potential hack or identity theft. Description of what you're getting, we're trying to give you not a marketing spin on the features, but actually a description of what those features are. As we meet with organizations that are interested in this program, we take the slide that we just covered a couple of slides ago and go into much greater detail on what these provisions actually mean so that you get a sense of what they're offering you. The frequency of credit bureau reports and scores, again, many of these are only provided annually. This is much more frequent, providing monthly or quarterly. There is a cost of that typically, and that's certainly part of the value that we're bringing here, but we also believe it's a very critical distinction. As mentioned, we have the $1 million insurance that's provided, underwritten by AIG, a very solid insurance company. we also then go through, and I think the other piece, as I mentioned, I will not go through all these bullets for you, but the one that I think that's most important is the second to last bullet, where we talk about they will cover the full face amount of $1 million, which includes retirement and pension funds. So again, making sure that we actually replace some of the monetary losses that might have occurred through hacking of accounts, and not just the costs associated with trying to recover and move forward with the victimization once it's occurred. So that just gives you a very brief overview of some of the programs and its availability. So this can also, as with the life insurance program, be extended both to actives, retirees, or both. And we think there are very unique reasons why each of those constituents might be interested in this as well. So that's, again, I think another important function of this, given the audience that NCPERS serves. So those are the two employee programs that we have worked with NCPERS to extend to its members. The next two programs we want to then talk about are programs that really are now more designed to address needs that we see from a system, a pension plan, or an administrative standpoint. The first is the fiduciary liability insurance program that we have worked with NCPERS to design. It really has been designed to protect fund trustees and other fiduciaries when they face claims of breach of fiduciary duty in their service as trustees. And we're going to go beyond trustees in a minute, but I think certainly what's important to note here is, even though governmental pension plans are technically not subject to ERISA, there are certainly still fiduciary responsibilities that need to be carried out, and that can be a significant level of exposure in this increasingly litigious society that we live in. So I think it is important to understand that there are threats even though you're not subject to ERISA, and also in some cases certain governmental indemnifications may not in fact protect organizations and or trustees to the extent that one believes they are protected. It also protects not only the system, but also includes coverage for claims when fiduciaries are held personally liable. So not only may they sue a system, but they may sue the individual trustees, and this provides protection for those trustees as well. The insurance is provided by Ulico Casualty Group, which is a very long track record of being very prevalent and committed to the public sector as part of its overall book of business. So certainly an organization that is very familiar with operating in the governmental sector. As I mentioned, we're certainly seeking to provide as broad a coverage as possible as to who might ultimately be exposed to a quote-unquote fiduciary breach. The obvious two are the plan and then current and former trustees, both as the trustee and personally, but also the coverage extends to employees. So for example, if there's an executive director of a retirement system, this also would protect that executive director and even the staff of the administration function. Any others designated by endorsement, so that would be kind of on a case-by-case basis. And then in some cases also extended to spouses, domestic partners. So again, a very broad array of who's all covered or defined as an insured under the policy that would be sold by the pension system. What kinds of coverage does the fiduciary program provide for? A variety of things that we think are pretty comprehensive compared to what the needs are, including in those are improper advice or disclosure that might be alleged, inappropriate selection of advisors or service providers, imprudent investments that one would argue have been made, breach of responsibilities, obligations, or duties imposed upon fiduciaries of a plan, perceived conflicts of interest with regard to investments, lack of investment diversity, and or even negligence in the administration of a plan, where, for example, somebody could assert that some things were done that provided exposure, and that it is presumed that someone should have reasonably been aware of that and could have addressed it, and therefore filing a claim of negligence. The additional coverage in addition to that are also providing protection for certain federal laws that may come into play in the administration and oversight of your programs. Now, certainly not all pension systems, or maybe many pension systems, are not involved in things such as HIPAA and the Affordable Care Act, which relate to more medical benefits or health benefits. But in some cases, if a pension system could be asserted to have responsibilities under HIPAA or the Affordable Care Act, there's actually even protection for penalties that might be assessed for violations in those two as just examples. And then the other part that the coverage does extend is in the situation of where, let's say, a retirement system does identify one of the potential concerns before it's brought to them by an individual or a class action lawsuit or something of that nature, and that system then decides to pursue a voluntary compliance program opportunity. This also will provide coverage for those trustees to address programs and those problems proactively before they even become claims. So trying to build a bit of prevention and proactivity into the process to sort of enhance that opportunity as well. Some of the policy features I think are worth noting. Again, the insurance company that provides the coverage is A-rated, so very, very sound financially. One of the things that is a very unique and distinct differentiator versus a lot of fiduciary insurance policies out there, and that is while there is a duty to defend by selecting legal counsel by the system, today the system actually is given the choice of what counsel they would like to work with. It's not uncommon in other cases where a fiduciary insurance policy will require that you use their designated legal counsel to support or to pursue any defense. The policy is non-cancelable during policy term except for non-payment of premiums. So again, guaranteed renewable, and coverage provides for the ability up to $15 million tower of insurance on a primary or excess basis. So very comprehensive coverage. Ultimately, the plan can, or the system can, select the level of coverage it would like, and then the premium is going to adjust accordingly. But certainly, we can offer a pretty broad array of coverage within that, should a retirement system so choose. So moving on to the last provision, and this really kind of paralleled with the identity theft at a member level that we saw as an emerging threat. But conversely, the retirement system itself obviously has some exposure to cyber liability as a system or administrative function as well. And so in the last probably year or so, we have formalized and developed a NCPERS cyber liability insurance program to protect public funds and member data. Public funds, as you all know, have access to personal information such as Social Security numbers, other types of personally identifiable information. This data, there's a ton of data being distributed, and if it's lost, the entity must respond in a timely manner to identify those breaches, notify potentially affected individuals, regulators, and the press, depending on the situation. So again, a lot of different kind of situations and needs and reactions occur if there is in fact some type of a breach that's identified. Again, the program is kind of facilitated and provided through the ULICO Casualty Group, as is the fiduciary program. And again, what are some of the coverages that the program affords? Privacy liability, that essentially relates to losses that arise from failure to protect sensitive personal information or health information as it might be appropriate or applicable in the electronic or hard copy format. Includes regulatory defense and settlement. So again, trying to protect from the losses that might occur in terms of financial liability and also the defense that would occur accordingly. Breach notification, and I think what's interesting to note with these first two, the system, or excuse me, the privacy liability is one that oftentimes people might see as the very high visibility issue, but oftentimes that exposure is much less likely and much less significant than the breach notification. Breach notification really is once it has been identified that there has been a breach potentially occurring, there is this whole process of steps that are required to be taken on. So what data breach involves is going out and finding experts that can help provide crisis management services, providing legal services, computer forensics, regulatory and individual notification guidance. It provides a call center to support responses that are coming in. It includes some level, certainly not as robust as the identity theft, but credit monitoring, and then also some identity restoration services. So again, once there is a breach that occurs, even if there's not an identity theft per se, all of these things become almost an inherent responsibility of the affected party, and the coverage therefore protects you and supports the costs and provides support for many of those subsequent responsibilities. Multimedia liability, so that relates to coverage for claims that might be related to multimedia activities such as defamation, libel, plagiarism, or copyright infringement. As we get into this incredibly social network of media that is out there, it's very easy for things to be said by somebody and very difficult to retract, so it provides for protection in those regards as well. Continuing on, systems damage, so helping with restoration, recollection, or replacement of data. Oftentimes they may involve some significant expenses for experts to come out and help you do those kind of things, so this will provide for support to recover those kinds of issues. Business interruption, maybe not as pertinent in the public sector or the retirement system as maybe in the corporate sector, but it does provide protection should there be loss of business income, including normal operating expenses that were incurred or affected by the event. And then lastly, if there are other kinds of regulatory actions brought to a pension system or a plan sponsor, this would also provide for coverage for those regulatory actions and expenses that are related to information requests, compensatory awards, and the like. Additional coverage that are provided if there was ever an extortion type of situation. So, somebody saying we are going to do X unless you pay us a sum of Y. This would actually support the protection for that. And then lastly, PCI fines or payment card and industry fines. Again, this may not have terrible relevance for you, but if you have any kind of situations that you as a retirement system are administering, such as a debit card or credit card or all of those kind of things that you are using as part of your ongoing day-to-day operations, if there were ever fines or penalties associated with non-compliance with those standards, this would also provide coverage for paying for those penalties and fines. So again, very solid, financially rated company that supports all these initiatives. The limits are really to the extent or desire of the retirement system. You can purchase a coverage amount limited to $250,000 all the way up to $5 million in protection. A very unique feature that is not typical for most of these kind of policies is the deductible or the amount at which the actual insurance kicks in can be designed to start as low as $2,500. In other words, only the first $2,500 of losses would be your responsibility, and then the insurance company's support and protection kicks in thereafter. And probably one of the greatest benefits as we've worked with NCPERS is the process by which you can obtain a quote and ultimately find the coverage. We have designed a fairly simplistic 5-question application that can serve very simply to help not only for us to provide you a quote, but then to turn around and use that as a basis to go ahead and proceed to buying the coverage. So a very unique feature that we think is a value add as a function of participating in these kind of programs through the NCPERS arrangement. So let me just close with maybe a couple of scenarios to give you an idea of why this might be even appropriate. I'm just going to go ahead and just read this for you. An administrator for a large state pension fund loses her laptop while traveling for an educational conference. She had kept records of the fund's beneficiaries on the hard drive of the laptop. Although there is no evidence that anyone has assessed or accessed the records, the fund must respond. They have to hire a specialist to uncover which records were housed on the laptop, and then contact affected beneficiaries, report to the state, publish a public announcement, and provide credit monitoring services. So again, going back to the item of, even though there's not necessarily been a damage that's been experienced by a member, just by definition, the threat that there could be one initiates all of these activities that presumably one would want to and have to take on. Another claim scenario, just again to build on that, a hacker accesses a pension fund's internal network system and steals confidential information for the purpose of identity theft. The pension system IT department notices the breach and determines the majority of the fund's participants' personally identifiable non-public information, including name, date of birth, social security number, and protected health information, may have been compromised. The fund must investigate the breach, notify state and federal regulators and affected participants, and defend any third-party claims that arise from the harm caused to its participants by the breach. So again, you can see the extended and protracted level of exposure that can occur once one of these incidents arises. So that wraps up the programs. Again, each of these programs, the first two are very well defined in terms of the cost, and it's self-explanatory. The other two are really based on the facts and circumstances of each retirement system, and we are very readily able to get you quotes once we've had a discussion to help you understand what kind of protections might make the most sense for your organization. So with that, I'm going to wrap up a little early, Hank, and turn it back to you and open it up for any questions.
Great, thanks, Don. So one question that's been sent to us is, are you seeing a trend in terms of plans getting fiduciary liability insurance or the cyber security insurance?
The answer is yes, and especially yes. And by that I mean fiduciary insurance protection. We are definitely seeing more interest in that, as I think individuals realize that there is, with all the scrutiny going around public sector retirement systems, it obviously begs the question, well, can somebody be blamed for certain things? And so I think the fact that that's occurring, coupled with the fact that people are now recognizing that they are not always maybe indemnified by, constitutional restrictions or the like in government, I definitely think fiduciary insurance is increasing in prevalence, absolutely. The cyber probably has gotten to the stage later. Fiduciary insurance has been around for a while and probably just now being more visible in the public sector. Cyber has really just kind of crept up upon us fairly quickly in general, and we are seeing significant amounts of activity there. And what's interesting is we are not only having trustees kind of respond to this, but we are actually having legal counsel of trustees bringing it to our attention or even to the trustees' attention, because they certainly see the visibility and the potential exposure as well. So I would say cyber is newer and therefore growing more rapidly, but they are both increasing in prevalence.
Don, I'm glad you raised the issue of indemnity, because that was one of the questions. If a plan is assured that they are indemnified, is there still a need for fiduciary insurance? And also, does indemnity in any way extend to sort of cyber breaches or any derivative suits based on cyber leaks?
Right. Yeah, and certainly, at the end of the day, each circumstance is going to be unique depending on that. But our general experience has been is that indemnification or immunity, if you will, is not an umbrella or a blanket by any stretch of the imagination. So, certainly we defer to legal counsel and so forth, but we certainly suggest a very high level of responsibility and visibility in that regard, just to flush that out. Again, what we're seeing is, there may be certain levels of immunity, but if you take it far enough down the stream, at a certain point that immunity may be diminished or disappear.
Great, thank you, Don. So at this point, we don't have any more questions. So what I will tell our attendees is once at the conclusion of this webinar, there will be 3 short survey questions that we ask you to answer. These survey questions provide feedback to us so that we can best prepare for future webinars that are the most relevant and educational value to our membership. So again, thank you, and thank you to Don for that great presentation, and we look forward to your attendance at the next NCPERS webinar. Thank you.